Hi, thank you for listening to Reverse Investment Channel. I'm Chi Yao. Today we will revisit gold for investment or speculation series. As I mentioned in both investment or speculation series and free market and economy series, our economy, even the global economy, is built upon speculation. With a huge increase in fiat currency from central bankers, more business decisions are made based on the price appreciation rather than value production. As number talks, it is wonderful for major securities owners but bad for the society. Our governments and central banks, being a part of the big asset owner group, will not accept the deflation path to destroy their own wealth for the better future of the society. They have to make sure the phony demand is over the supply for the price to rise, and the only mean is to keep printing. But by doing this, the speculation supply side will attract more resources away from the value production supply side of the economy. More resources are then misallocated, and more wealth is then destroyed. Now we have a supersize of speculators, but little real goods producers. As all speculation exhausts, the crashing prices take down the phony demand to make sure their personal bank account turn into surplus. Each time, they have to print more than ever because the speculation supply is bigger than ever. However, people produce to trade, food to eat, clothes to wear, place to live, means to transport, education to learn, and way to entertain. People work on one element and trade for others to make their life better. However, speculators can do nothing and buy hard works from others. And the speculation is not done because of the outsmartness, but because of the policy from governments and central banks. And most speculators somehow think it is their smartness that brings them wealth. But until the system collapses, most of them won't realize the number is not the true wealth. Compared to the total fiat currency that gets printed, non-elites are actually losing wealth as they end up owning less of everything. If the wealth-producing people kept their wealth, goods they produce, and only trade with real goods, there will be nothing speculators can buy, and producers will be much better off. Hey, many producers are making money anyway. Honest producers get robbed, first by regulation before selling their goods, second by taxation after selling their goods, and third by speculation after receiving worthless papers. They can even trade a quarter value of what they produced. Producers make more profits on asset price appreciation than production. So why produce when all price appreciation eats into the true value producers work hard for? These non-elites are forced to speculate only to preserve their wealth. This is the real economy our society has become. And how can we trust the fiat currency controlled by elites to be money? But one day, people will not trade their hard works for the worthless piece of paper as they figure out that is giving away their hard works to speculators for free. Let's move into Q&A. Q1. How long do you think gold prices can be manipulated downward? If in theory, the Fed can keep buying bonds forever, why wouldn't gold prices be able to be manipulated downward forever? A1. The Fed and all central bankers and financial system can only manipulate the paper market, but not the physical market. The physical gold market is pretty small. We know central banks will always print more fiat currencies, so the edge to physical gold shortage will get shorter. Q2. While the little gold I have dropped in value, my portfolio has grown quite a bit in value. More fiat currency printing has nothing to do with the value of the dollar. Inflation, the expansion of the currency supply, is a meaningless phrase, and gold is not money, it is a metal. A2. It is not the value of gold or portfolio, it is the price that goes up and down. Unless an investment is getting more productive, then the value will go up. If more fiat currency gets printed, asset prices will go up for apparent reasons. If you are holding the same amount of dollar, you will end up less of everything. The value of gold doesn't vary much, as the amount of effort to get gold is about the same if not harder. And yes, gold is a metal, but money is only a medium of exchange. Q3. If we return to the gold standard, gold will still be in the hands of the few. What's the difference? A3. True. but no one can take the value of money away from you. And people have to be more honest to produce, to make a living, because speculation and over-leveraging is not an option. The gold standard will be more fair to producers as fiat currency rewards speculators. Unlike gold, fiat currency can easily be printed by financial elites, and this money gain has turned the financial sector into casinos. In gold standard, you don't have to invest or speculate because the value of gold on your hand will likely to increase as productivity increases. To wrap it up, personally, I look at gold as money, not an investment. Patience and valuation skill are the greatest tool in the world of investing. Embrace the free market and smart money. If you have any question or comment in mind, please leave a comment below. Thank you for listening to Reverse Investment Channel. This is Chi Yao, signing out for now.